Good morning. The fragmented office market and why location now determines everything. And the North American office market isn't recovering in a straight line. It's splitting into two completely different realities. And for commercial real estate investors, as well as business owners and tenants, this shift could change everything. And at the Viking Enterprise team here at EXP Commercial, we're seeing one clear pattern. And this is no longer a market cycle, it's a market selection game. So the two office markets emerging are a landlord-favorable market, so where demand is back, basically. Cities like New York, Charlotte, Dallas are all gaining strength right now. And why? Well, they have diverse economies, so they've got to finance a legal and insurance component. There's some return to office momentum and strong tenant demand for Class A upgraded office space are all reasons. So the result is that landlords are regaining leverage, asking for higher rents with fewer concessions and stronger occupancy. So there's also tenant favorable markets where there's still some pressure there. So markets like LA, Seattle, San Francisco are telling a different story. And high vacancy rates with elevated sublease inventory and ongoing remote work trends. So the result there is that tenants have more negotiating power right now, and that you can see free rent as well as tenant improvement allowances and flexible lease structures in those markets. And where does Houston fit in this little split market right now? And Houston sits right in the middle, right where Goldilocks lives, and also where opportunity lives. So the short-term reality is that elevated vacancy and sublease availability and tenant leverage still exist. And the long-term strengths there is that there's population growth and it's a business-friendly environment and there's a diverse economic base. I think energy, healthcare, logistics. So translation into normal human terms, tenants can lock in favorable lease terms right now. And investors can acquire at adjusted pricing before recovery becomes more prevalent. And this is a timing window and not a permanent condition. So if you're off on the fence right now, let's have a conversation. Let's talk about the rise of secondary and Sunbelt markets. So cities like Miami, Tampa, and Nashville are also outperforming. And why? There's inbound migration, there's a lower cost of living, and corporations are relocating. And the result is that landlord leverage is returning faster in these markets. Now let's talk about construction trends and how they're reshaping supply. And new development has slowed across most markets, and that's critical. We're not putting more on the supply side of the equation. And what happens is over time, stabilization will happen. And demand hasn't disappeared, it's just become more selective, is the point. However, some cities like Austin and Boston still face oversupply challenges and lease up pressure. So, what this means for investors and business owners. First point is that market selection is better than market timing. And the national narrative doesn't matter so much anymore. You win by picking the right city in the right submarket. Two is lease structure is your leverage tool. So think TI allowances, free rent, and term flexibility. And in tenant markets, structure can outweigh the price. Three is pricing dislocation, and that's an opportunity. And here's where we're talking about Houston, especially in Houston. You see adjusted valuations with motivated sellers and also folks that are facing refinancing pressure with their balloon notes coming due. And this is where experienced investors can step in, is the point. Four, capital strategy matters more than ever. And deals are not getting approved based on potential. They're getting approved based on debt service coverage ratio, lease strength, WALT, tenant credit, but also their exit strategy. And the final takeaway here is that the office market didn't break, it just split. And that changes how you operate. It doesn't change that business still continues. And at the Viking Enterprise team here at EXP Commercial, we advise clients to focus on local economic fundamentals, lease structure optimization, capital positioning, and timing within submarkets and not following and chasing headlines. Because in today's environment, the opportunity isn't in the market, it's in selecting the right one. So the call to action for the day is, if you're considering leasing, acquiring, or refinancing office space in Houston or beyond, let's build a strategy around where leverage exists right now. You can visit my website to book a strategy call, houstonrealestatebrokerage.com. My phone number is 281-222-0433. My name is Bill Rapp. Please reach on out. I'd love to help you.